What is going on, guys? Welcome to Stock Talk with Nico Kritikos. Today, we're going to be analyzing what effect the tariffs will actually have on U.S. companies and, how far I think the stock market's going to go down, how long this sort of correction normally lasts, and how are the tariffs going to eat into these companies' profits? What is Trump thinking? What is the Fed going to do? And how is it going to affect the American consumer? All that stuff. So, what I did here was I just wanted to make a quick outline of what Trump's main objectives are, right? And what he's trying to do, and then how it's going to affect these other parties like the Fed, other countries, and the American consumer, as well as American companies. So, of course, Trump always talks about bringing back more US manufacturing. Okay, so that's one of his top goals. Another one is he wants the Fed to lower interest rates because when you lower interest rates, that's going to make it easier for companies to grow because the cost of borrowing money is cheaper, right? The interest, you don't have to pay as high of an interest rate. So that's another thing he wants to do. Now, what I'd like to ask Trump is, okay, well, if you want interest, I mean, remember just 2 years ago we had a huge inflation problem. The Fed did their thing with the rates, and we kind of fixed the inflation problem, right? And now I think rates are around 4% or something. But if Trump wants rates lower, is he worried about inflation? That's what I would like to ask him. What's his stance on how is it going to affect inflation? That's what I'd be concerned with. That's what I'd like to see what his answer is to that. And then number three, create reciprocality with other countries and have leverage for negotiation. I think that's another part of his plan is he wants, of course, to try to make America stronger and whatever, more competitive. And he wants to be more fair with other countries, which if we look at this thing here, we can see this chart he brought up where I mean, China's obviously one of the biggest ones, and so it looks like what he's trying to do is these are the companies and these are the tariffs they charge to the U.S. Well, for the most part, he just cut that number in half. So he's being pretty fair, right? But you have to also factor in he's imposing a 10% base tariff. So like if you go to the United Kingdom, which you can't see here, but United Kingdom is that 10% one. That's where it's just flat, right? 10%. Same thing here. I don't know what country that is, but that's 10% too. But the big ones are ones like China, Canada, Mexico, Germany, I think is a big one. Taiwan is definitely important now because of the semiconductor thing. And so you got to look at it like that. Okay, so he's doing this for America, and this is going to benefit America more so than he's not really concerned with American business, right? I guess he's concerned with just Americans in general and the job market. But as far as U.S. companies, I think he's kind of putting them last, really, because he's not really offering too many incentives. That he doesn't really care as much about how it affects their profitability. Now, he cares about everything else, the stock market, the economy, all this other stuff, which in a large part is based off of the success of these U.S. companies, right? So, I mean, he has to pay attention to that to some degree. But what I did here was, well, let's do this. Let's finish this. So, those are his goals. Then for US companies, they have two options, at least for the ones that are manufacturing. I mean, if you're manufacturing from China, you're shipping in stuff from China, you're going to have big tariffs. I think it's like over 50% because there's different clauses and different rules that apply. It's not just this straight numbers. There's actually more on top of it and stuff. I think China comes out to 54% tariff, at least, maybe not for every industry, but at least for some industries, it is like 54%. So the bottom line is these US companies that are working they're importing from other countries, they have to pay these tariffs. They have two options. And keep in mind, there's a large spectrum of like the importing from the UK is only 10%, whereas China, for some companies, it could be a 50+% tariff they have to pay. But these companies can either eat the cost or raise their prices, right? So if they eat the cost, that's going to hurt their margins, which we're going to get into in just a second here with this chart I pulled up on ChatGPT. But overall, again, to feed into the stock market and the US economy, we need these corporations to succeed. And if they have lower margins, which means lower profits, that means less stock buybacks, less hiring, less investment in whatever research and employees, whatever it is. And so overall, that's not really good. But the alternative for these US companies is they can raise their prices to keep numbers up, but then that hurts the US consumer. So, I mean, it's a big cycle, and every piece you move affects the next piece. So that's the other thing is it raises prices and it makes it tougher on the consumer. Now, let's go into ChatGPT. What I did was I analyzed a bunch of different companies here. So These are, I went through each one to see how it will affect now Chipotle is actually one company where they said a couple weeks ago they plan on eating the cost. They do not plan on raising the cost for consumers. Okay, so Chipotle is not importing from China, but tariffs and inflation are tied to trade wars, can hit avocados from Mexico, blah blah blah. Peak beef, pork, and dairy, aluminum. So see, this is where when you break it, I mean, typically for most companies, the cost of goods sold is roughly around 30% of the sale. And so again, if the product, which we're going to look at some examples, but if you sell a product, let's say a product costs you $30 to make in China or Vietnam, okay? Now you got whatever, a 30% tariff, 40% tariff. Well, now instead of it costing 30, now it costs $40. But if you're going to sell it for 100, okay, well now your profit is only $60 per item versus $70. So again, we're normally talking like a 10% difference in profits. It's not the end of the world. It's not a good thing, but it's not the end of the world. Like, a lot of people are making it sound. So let's go down here. Let's go. So here's all the different companies and the industry they're in, the tariff that they're going to have to deal with. So as you can see, home furnishing has 46% tariff. They're importing a lot of stuff from China. Nvidia, those semiconductor ones are a big one, right? That's a huge industry, lots of players in that space, 25% tariff on those. Then we have the estimated profit hit, which means how much it's going to affect their actual margin. And as you can see, a company like this that has super high tariffs coming from China, they actually have it the worst, pretty much. 23% profit. That's pretty big. That's why that stock's down 40% today, because they're one of the ones getting hit the hardest. But look at most of these, even Nvidia, 18%. That's not great, right? That's really not great. But a lot of these are 6%, 7%. Like, it's not the end of the world. And it's just a matter of time before either Trump, creates an exception for one of these companies or industry, or some of these companies start sourcing from other products. That's the other thing that I've had explained to me before is where, okay, so let's say it is going to have a 20%, let's say you normally are paying $1, and now the 20% tariff, or let's say 25% tariff, it costs you $1.25, right? So it's 25% more expensive. That's not very good. But what you can do is you can either pay that tariff, that 25% more, or you can find another supplier. And another supplier might be in America or in another country that only has 10% tariffs, right? You get a company from the UK, now there's only 10% tariffs. Or you get a US competitor that doesn't have any tariffs on it. So this is really going to be a thing of like 5%, 10% added costs, right? It's not the end of the world. And so that's why I am heavily been buying this index, as you can see, along with other companies like Amazon, Nvidia, Elf Beauty was one I've been building up. So these are my thoughts on the whole tariff situation and how it's going to affect the economy, what Trump's goals are. And as far as the Fed lowering rates, I don't know about that. Maybe the economy would have to get really bad. But the Fed they're going to be telling Trump, hey, we got to watch out for inflation. So that's a whole other story. A lot of this stuff is very hard to predict. But like, as far as this goes, I don't think it's the end of the world. That's why I think this correction is going to be very short-lived. And I think that, again, in a matter of months, we will be back at a new bull market and things are going to be looking good. So that is my analysis for the current economy and tariff situation. Let me know what you think down below, and I will see you in the next video.